Polygon Matic made a transition from the Matic token to the POL token, and the ratio between the two prices, that's here in the background. So the price pack is not the problem of the migration. The price performance, however, is. This is Matic relative to the Ethereum price. Matic is a layer 2 scaling solution on top of Ethereum. Many others followed and took away market share. And so Matic underperformed Ethereum by 95% over the last 3 years. The situation is even worse compared to Bitcoin. Here, Polygon Matic underperformed by 98%. So that's a problem, right? Just because we take on more risk with an investment, just because we buy an altcoin, does not necessarily mean that we outperform. In fact, Bitcoin tends to outperform most altcoins most of the time. Interestingly enough though, despite the long-term underperformance of the Matic token or the POL token, we still see continued interest in the asset. That's something that's not very common. And I do not know where this interest is coming from. Have a look at this. This is the number of YouTube views on the prior Matic video. The average video on this channel tends to die out after a few days, that's the area in gray, but Matic continues to get searched. So there must be a place somewhere where continued promotion, continued marketing is made for the asset. Now Bitcoin in the last year fell by 9%, but have a look at the smaller altcoins. They tended to lose much more on average. If you look at those between market rank 900 to 1000, they on average lost 72%. There's only one group of altcoins that actually outperformed Bitcoin in the last year. And that's due to a few outliers that aren't too liquid. So what's going on here with Polygon Matic is quite typical for the altcoin market. Maybe not that extreme, as in usually prices don't decline that quickly, that massively. But in general, seeing long-term underperformance isn't really that special. Now, one reason for the underperformance is token inflation. The Matic token was massively inflationary. It started out with 3.2 billion tokens and then went all the way up to 10 billion tokens. And that's then when most people thought, okay, the inflation now is over. There won't be new tokens hitting the market. Now the price can stabilize. But then came the migration. The team wanted to continue to cash out. And suddenly the POL token became inflationary again. And the market did not like that at all. That's one of the main reasons why Matic or POL got punished that hard by the market. Now, sometimes token inflation isn't even that bad, because if the project itself grows quickly enough, if the demand outstrips the additional supply, everything is good. A token can still outperform, at least short term. The problem with Matic is that we do not see that project growth. Here is the total value locked in decentralized finance on the Matic network. That peaked at $10 billion, then went down to $1 billion, a drop of 90%. Now we are stabilizing somewhat. Let's again take the year 2023. That's the TVL development since then, and measured in POL tokens, this actually went up. Now this increase measured in POL is not necessarily because of more usage of DeFi, of the Polygon network itself. It's rather an expression that many assets on the Polygon network are not bound to POL anymore. The most liquid tokens are bound to stablecoins. So that's DAI, USDT, and USDC. And so really the stablecoin related TVL is a more accurate measure of Polygon Matic's growth. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. This here is the chain fees over time in US dollars that did not necessarily grow over the years. This is the decentralized exchange trading volume over time. Also not growing over the years, even though the crypto market as a whole, of course, has grown a lot in the same time period. Polygon Matic was simply not able to keep up. There are more active addresses recently, but that might have something to do with Polymarket. Some money is getting bridged over to the Polygon network, but that's just because the leading crypto betting platform is growing. Now, what's happening over here? Why is suddenly the TVL, the total value locked of Polymarket, going down? That's because even Polymarket, that has Polygon in its name, doesn't want to stay on the chain. It's moving away to its own layer 2. It's not scalable enough. And that might tell us something, right? Polygon Matic is the second largest decentralized finance application on the Polygon chain. And so that's the fundamental problem, right? The insiders, the team continues to cash out with the expanding Polygon supply, yet the projects, even the projects that adopt Polygon with a lot of enthusiasm, put the name in their project, they are leaving. They are not helping the ecosystem. Even the market makers do not like Matic that much anymore. There was the 10th of October flash crash across all of crypto. And while prior, many market makers were okay to hold Matic long-term on the balance sheet to create positive funding rates, that has then stopped. Many market makers lost everything on that day. And now the funding rates on the perpetual futures for POL hover around 0. The market is not net bullish anymore. Sometimes it's bearish, sometimes it's bullish. And given this long-term chart of Matic relative to Bitcoin, that's more than justified. Here was that flash crash. A lot of longs got liquidated. A lot of people that were betting on rising prices. The Matic price itself on that day, on the 10th of October, fell by 37%. That's a bit less than the average altcoin, by the way. The average altcoin fell by 48%, but still it wiped out enough longs to change the dynamics around the funding rate. And the amounts of bets on the price since the 10th of October have not recovered. So there's no more interest in Matic by the perpetual futures traders. There seems to be interest by some people searching on YouTube, but the people that are actually moving funds in crypto, they simply shy away from POL now. And so I really don't know what should change this long-term trajectory. The underperformance is very clear. It has very little volatility. Pretty much month over month, we see less performance in Matic compared to anything else in crypto. If your time horizon is beyond 1 month, it makes sense to just open a short on Matic. There's an extremely high likelihood to make money with that. Maybe not a naked short, maybe not betting on falling prices directly in US dollars, but going short Matic, going long something else, something like Ethereum or Bitcoin, that's very likely going to generate profit. So for example, for this chart, we can simply turn this around. We look at Bitcoin relative to Matic, and that's then the performance that we get. Here is the linear scale. And I think making money that way is much easier compared to trying to find the next altcoin that might make money. Because again, most altcoins underperform Bitcoin massively over the medium term. This here is already the best segment of the altcoins. If we look at the average segment, the picture is much worse. Again, while Bitcoin didn't really lose that much in the last year, only 9%. And so that's really how money is made in crypto. This is how I personally make money in crypto. So if you want to learn more about that, then feel free to check out the premium membership. That's over here. This is also where I share my personal trades. Things like this here, right? Betting on falling prices of Matic, by betting on rising prices of Bitcoin. So there is some risk management involved. There are some intricacies here. But once you know how to set this all up, once you know how to manage the risk, the performance that we see here in the background is very much realistic. Thanks for watching. If it's your very first time here, feel free to subscribe. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you on Premium. Cheers.